Hey, hello guys. I hope you had a very great Christmas there, and it's been a very long time, like I think 6 days since I gave you the last video, right? So we have to go get back to work now. So we're going to start with Nasdaq, right? And if you're new here, make sure that you subscribe, or if you're someone that has been viewing this, watching the videos here for some time, please do not forget to like and share the video. All right, so remember, this is all the drawings that we had even in the previous video, right? So the analysis that we had was that if you still remember, the initial analysis was us predicting something like this towards this level, and then the previous video we had was us anticipating a reaction from this level. And as you can see here, the price, even though the reaction was not we were expecting it to push a little bit higher, but it just reacted here and it went up until here. It was not a big reaction, but definitely more than enough for you to collect some pips and also move your stop loss to break even, right? So now we are going to start from where the price is currently and then analyze from there and see and predict where it is most likely to go from here. So make sure that you stick with me throughout until the end, so that I can take you through each and every step as to like how you need to, how you should do your analysis, how you should approach the chart, how you come to the conclusion to say, based on all these things that I've seen on all the time frames, I think it's best if I wait here for a trade, or if I execute now this type of a trade. You will make that decision after you've checked the structure all the way from the highest time frame until where you want to execute, right? So we always start with the highest time frame. So let's remove this diagram so that we can start with the monthly chart and see if the structure still looks the same that side. I bet it's not really different to what we saw the last time. So let's go to our monthly chart. This is our monthly chart. So I'm not gonna waste time here. If you have been following the other setups on this Nasdaq, you will know that it's a monthly chart. So the structure doesn't just change overnight, over a week or two. No, so it will look more or less the same. So here are the highlights on this time frame. We are bearish, all right, and we have a bearish trend line. So basically, let me just show you. We were going up, and then we broke that trend. We broke the areas of support on our way down. That's why we are saying currently we are bearish, right? And now we can have a bearish trend line. Can put it somewhere there, and we can say that the price moved up and we have a resistance. As being bearish, we'll be interested in taking those sell trades from the resistance or from a bearish trend line. In this case, the price went up and touched this bearish trend line. That's when on that daily chart, remember, we had something like this when we were anticipating. Remember, the initial setup was us anticipating something like that. We did all of that not just based on the structure that side, but also because of what we're seeing on the higher time frame. Remember, a bigger picture is very, very important for you to know where you are in space, so that you can say, okay, from here, I think the best option would be me trying to search for trades to go up or to go down. So we know that here the price was approaching a monthly bearish trend line and also a resistance, and also the trend is bearish, so which means a reaction was very likely from there. That's why when we were there on daily, if you still remember, when we were there on daily, that's when we were anticipating this. This is what we're anticipating because of what we were seeing there on monthly. So we are bearish. You can have your bearish trend line, you can have your resistance, and this support was taken out. The nearest support is this. If you still remember, I always say to you, I said even in the previous video, that this is the monthly is bearish, which means we have got a higher chance of going down until here. It's not something that's going to happen overnight. It might not happen, but based on what we are seeing currently, based on how the structure looks on this chart, there's higher chances of the price going there than going there. Because of what we are bearish, we still need to break that bearish trend line. We still need to break that resistance. There's a lot of stuff that we need to pass before we can go all the way up. So we will remain biased to the downside until that's more like on the bigger time frame. Obviously, when you're smaller time frames, you can get your buy trades, you can get your sell trades. It won't change the structure here. But for long term, this has got higher chances of going there until the day maybe it goes outside and break the trend line. Then you will say, oh, okay, this is interesting, then you see that the bears are not as strong as we thought they were, because remember, we are anticipating them to at least push until the next zone of the bulls, until the bulls kick in and try and challenge them. So that's all that you need to take from this time frame. And also, we also commented on the fact that this month, and it's about to end, we're most likely going to end with what? Bearish engulfing, which is also suggesting that, well, there's still momentum, there's still some chance for the price to push to the downside. Then we come to the weekly chart. Weekly is also bearish, right? We have a bearish trend line, we have a resistance, more or less the same as what we were seeing that side. So remember, so I hope now you can see that when we were making that decision on daily, the selling decision was because the price is touching a weekly resistance. The weekly is bearish, monthly resistance, monthly bearish trend line. So there was a lot of force pushing to the downside. That's why the price ended up reacting like that. And now the price is approaching this area here. It's not really a zone. Don't make a mistake if you are trying to hold trades for long term. But for your short term trades, yes, you can maybe get some reaction there with confirmation. But if you're someone that's planning to hold trades for a bit longer, this is not a zone. All right. So remember what we saw that side. So if this guy is to do this, it means now you will have a trend line here, and the pullback, it will be the same thing. The pullback will be something that when you get in that pullback, don't get too excited and say, now I'm buying and then I'm going to put my TPs up there. Well, you can try that, but the chances of that happening, they're very slim. So if we break that, it means the pullback is what you can sell and be doing the same thing, which is the same as us breaking here, breaking that. The pullback is what you're selling at that resistance, and then it's coming to the downside. So we'll basically be predicting the same thing. Should the price break that low and open more space to the downside, right? So we are still very much, the structure here is still very much suggesting that we could go to the downside, but it's going to be a struggle for us to pass here. Let's check a daily chart, right? This is where we once had this and anticipated this towards that. It did that. And we are saying maybe the price will react here and go to at least that before dropping. But it didn't happen. It reacted but went until there, and then it came back again. So now let's draw the things here, the zones and the trend lines here. So the bullish trend line that we had, which was taken out, you can put it there. There's the last bullish trend line you had when the price was going up to test these guys here. And then it went to the downside, right? So I was saying that we are going to struggle to pass here. But at the same time, going up won't be something that I don't think will happen for a very long time. But it's possible that if, you see this, let's just zoom in a little bit. You can say this is a swing, right? And then you decide to say we are bearish, and I have a bearish trend line, right? So it means even if you were to try and buy from this support here, you will have these guys close by. So you need to make sure that those trades that you're planning here, they only end at the trend line, because you are using the structures on daily to make those decisions for you to buy. So when you are buying on daily, you need to make sure that when you're setting your take profit, you are using the structure on daily as well. So me buying, I'll be targeting resistance, I'll be targeting bearish trend line. So in this case, when you get to this, you need to go out. Must never say this will happen. No, we will only make that prediction after the prices went outside. Then we can take something like this. That's when we will target slightly higher. But for now, we still have this trend line on our way. So it needs to be taken out first before we can open more room to go to the upside. In this case, you can see the price is actually sort of around the trend line now. We're having a red trend line, a candlestick. We can still go to the downside. So if you want to buy, the safest way would be, if you are buying from this, it's fine, it's short term. But if you were to get the price outside, maybe it will be going for a pullback. If not, then you don't have a trade. And then if it goes to the downside, remember, it will do what we said. If it does on the weekly, if it comes down like that, it will break that. Then it means we have removed all these guys here. You will have more space to go to the downside. If it does this and break these guys, you can try and sell from there and then continue towards pushing the price towards that monthly resistance, monthly support that we saw there on the monthly chart. So here, very much bearish. We can search for bearish trades, but the problem is that they are not for long term for now because of this. So we are searching them, but you're exiting here because we are not going to predict that a key structure is going to be taken out because we don't know. We do not know. Let's check the H4. This is where things will start to get interesting. With the H4, we can have the bearish trend line here, of which I don't think it was taken out. Now the price went to the trend line. Let's just draw the actual trend line so that we can see if it was taken out or not. Even if you draw it from there. So this is our trend line. So the trend line is not yet broken. We are at the trend line with confirmation. You are more than welcome to sell from that. But because you'll be selling on H4, it means you'll be using your H4 structures for you to set your take profits. That will be your take profit one. Maybe when the price gets there, you will exit or maybe leave one trade running with the stop loss and break even. Should the price do this, you know that you are very much safe. But it also has a chance to break it and go to the downside. So we are saying currently there is a lot of odds to push the price to the downside to at least somewhere there. So you can try and find your entries and hope that the price will go to the downside until it gets there. If it was to play outside, maybe with the confirmation you're trying to buy to at least here. So you must first let the price show you where it wants to go. Then from that, you're going to say, oh, because now you're showing me that you want to go to that resistance, let me join you. That's how you enter. You must never say, let me enter and force the price to go up there. That's not going to happen. That is not going to happen. You first let the price lead you where it wants to go. Then you join that movement. That's it. So let's do H1, even though I do not like it that much. So the trend line on H1 and H4 still the same. You have a bullish one here, and anywhere around there, the price might struggle to break it. So if you were trading this H1 and you wanted some confirmation to go in, you could have used maybe this pin bars. But when you are selling, remember this: if you're selling using the pin bar on H1, you will use H1 structure to set your TP. So meaning you'll be selling from H1 bearish trend line or H1 resistance. You'll be targeting H1 support or H1 bullish trend line. So you can use this as your TP1. You can use this as your final TP. Then if the price breaks it, it means now you are targeting the nearest resistance to say, should I get a pullback, I'm still gonna sell, right? So for now, this thing has got a higher chances of dropping to somewhere, at least somewhere there. But if it was to reverse and go outside, you can try for short term and target this. Short term, need to be specific, short term. But that will only happen if we break the trend line first. If we don't break the trend line, there's no any other way. You're not gonna give me. It's the money that I want. Only money that I want. So if we don't break that, we are coming here. You're collecting some bucks there. Then that's it. Alright guys, so I hope you learned something from this video. So if you are new, make sure that you subscribe, and if you've been following, now that you've watched until this point, please like and share. Then I'll see you guys in the next video. So what's important, guys, remember the next opposing structure, you must never look past that. Depending on wherever you're trading H4, the next opposing structures will be on H4. You are trading daily, the next opposing structures will be on daily. If you are trading H1 next opposing structures. That is it. Alright guys, I'll see you guys in the next one, and be safe there. We're still gonna continue with these videos even next year. Thank you.